Hello and welcome back to the channel. I have an interesting video for you today. We have many indicators that suggest that the market is ready to rally, saying that the market is bottoming and ready for the upside move. Among these, a Bloomberg headline saying, "Investor hedging this much usually precedes the stock market gain." Also, if we take a look at the equity index, we see the S&P chart in white, and we have the equity hedging index in orange, and the excessive pessimism line in purple. So usually each time the hedging line crosses the purple line, we have an excessive pessimist sentiment in the market. And this is a contrarian indicator that the market starts to bottom and ready for a new rally. But the actual route in the stock market is different this time around because of the Fed. Now, Jerome Powell, the chairman of the Federal Reserve, can flip back to dovish that easy after being a hawk lately from one hand, and from the other hand we have the inflation embedded in the economy. So having this fact in the back, we can ask the question of what caused this higher reading in the hedging index. Obviously, it's the Fed with projected interest rate hikes and inflation on the rise. So what would bring back this reading down? Obviously, a lower rates and a lower inflation, because what was behind last year's high rally in the market is the Fed money printing, till the point that the market is addicted to the quantitative easing. And what happens if you cut the Fed cocaine? Pain in the market. Because at this moment, the Fed quantitative easing are the only thing that matter for the stock market to go higher and higher and higher. Not the fundamental, not the pandemic, not the global warming. The market doesn't care about anything of that. That's why if you take the Fed quantitative easing out of the picture, all of the sudden, magically, all these valuation and ratio and multiple matters again. So if the Fed keep the hawkish stand, that means that at this moment we didn't reach a bottom yet. And the market will keep on moving downward as mentioned by an ex-Fed insider. If you are a wage earner, you're going to fall behind. Ex-Fed insiders warn of a difficult few years due to inflation. With that being said, let's start on the market coverage. And here you go. The Dow Jones is up 371.65 points, or an improvement of 1.06%. The Nasdaq is up by 178.79 points, or a gain of 1.28%. The S&P 500 is up slightly by 37.67 points, or a gain of 0.84%. Let's take a look at the market sectors. For the last day performance, we see on the first place consumer cyclical, second place basic material, third place technology. The laggards of the day are energy, and then real estate, and then utilities. Take a look at the future. We'll start with the energy. We see the crude oil West Texas Intermediate gaining 0.28%. The crude oil Brent is gaining 0.34% with a whopping $91.09 for the barrel. We see again for the gasoline, the heat oil, and ethanol, and a slight pullback for the natural gas with losses by 1.34%. Soft, we see gain for coca, orange juice, coffee, lumber, and losses for cotton when sugar is on the flat line. For the metals, we see that the gold and silver are on the flat lines, with losses for palladium, copper and platinum. For grains, we have gains for soybean meal, soybean oil, corn, and losses for wheat, rough rice, and we see canola on the flat line, while oats is gaining 0.67%. Let's take a look at the heat map for the S&P 500 yesterday performance. We see that the technology is on the green side, with gaining for Microsoft and Apple, and we see that the energy for yesterday pulled back after successive days of gaining, and the rally resumed today one more time as we saw on the futures. Consumer cyclical as well is gaining, with gains for Amazon, for Tesla, for Home Depot. On financial, we see gains for JP Morgan, Bank of America, Wells Fargo. The banks are doing great. For the healthcare, we see losses for Pfizer, gain for CVS, United Health Group Incorporated. Basically, yesterday was a small rally as shown by the heat map of the S&P 500. Let's move to the charts. We'll start with the SPY. We see that the rally is materialized with a big green candle, but the bears managed to come back and they start pushing back this candle. As we see that this candle is pressed to the downside, we see that the MACD did cross and the green histogram bars are getting shorter and shorter. That means that there is not enough power to keep the chart going higher and higher. As well as we see here, the RSI is almost reaching a overbought territory, so maybe we will trade here sideways for a day or two, and after that we will anticipate a pullback in the SPY. Or let's take a look at the Qs. The Qs, same thing. We have a rally that is materialized by these two green candles. We're trading sideways for days now. The MACD lines are indicating a topping, as well as the RSI is pointing upward and reaching to the overbought territory. So we'll expect a trading sideways or another pullback in the Qs. The IWM, we see the MACD line are crossing and the green bars on the histogram are getting shorter and shorter. We reach actually a overbought territory on the RSI, and we have some kind of shooting star on the last trading day of the IWM, so we'll expect a pullback on the IWM. Let's take a look at the VIX for our time frame. The VIX is cooling down and reaching the oversold territory. We still see that the MACD line are pointing downwards and the histogram bars are getting shorter and shorter. We can expect a bottoming on the VIX, maybe till the level of $20, and then we'll anticipate another spike to the upside. Let's take a look at the dollar index daily time frame. The dollar index bounced back to the upside before reaching the support of 95. That means that the dollar is getting more strength. We see a bottoming in the MACD lines, and the histogram bars are not getting bigger, as well as the RSI is pointing upward. With these technical indicators, we might expect a trading sideways between these two levels for some times, or maybe another leg higher to the resistance of $96. Let's take a look at the 10-year government yield. We see that the government yield is on a bull flag, crossing on the MACD lines, and the histogram bar are on the green. We reach an oversold territory, so we'll expect a pullback or a sideways trading above the support of 1.77%. Let's take a look at the gold. The gold is on a bull flag. We see that the MACD line are crossing and start a green impression on the histogram. We see that the RSI are pointing upward. They didn't reach the overbought territory, so we'll expect another leg higher for the gold till the resistance of $1,834. We see on the weekly perspective that the gold is more stable than the other indices, meaning that the gold is keeping its value in this volatile market. Let's take a look at the individual stocks. We will start as always with Aapl. Aapl is trading above the support of $167, now at the level of $174. We see the green bars on the histogram are persisting. The MACD line are pointing upward slightly. We didn't reach overbought territory yet. Aapl will move to the upside, so we expect more gain for Aapl. Tesla, we saw a bottoming and crossing on the MACD line with a small impression on the histogram. The volume is decreasing and we are in between territory on the RSI. The resistance is 995, so we expect that Tesla has a chance for an upward move. AMC, we saw a crossing on the MACD and the line are pointing upwards with the bars of the histogram are getting bigger and bigger. AMC now is trading under the important support of $20. For the chart to move higher, the apes, they need to stampede, buy calls and buy the stock, as well as increase the volume of trading. At this moment, everything is indicating that there will be more upward move for AMC. And lastly, let's take a look at Bitcoin. Bitcoin managed to come back across the resistance of 42,000. We see the MACD lines are pointing upward with a topping impression, as well as the histogram bars are getting shorter and shorter. We see here we are on overbought territory on the RSI and the volume is decreasing. We might expect the chart to come back 42,000 level for testing it. If it will turn out to be a support, there will be a more up move for Bitcoin. If not, the chart will flash down and will come back to lower levels. And the next lower level, we will set it at $32,912. That's all what I have for you today. Thank you for listening, thank you for watching, and we will speak soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.